What's up, guys? It's your boy Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Exxon Mobil, ticker symbol XOM, trading for $46 a share as of June 19th, 2020, equating to a market cap of nearly $197 billion and a PE or price per earnings ratio of 17.5. It's been a crazy ride for Exxon investors as the company is up nearly 50% in the last few months. But many investors are still feeling the hurt as the company is down a whopping 45% in the last 5 years, obviously excluding dividend payments. So what's the move? Are we filling up our tank on Exxon, or are we going fully electric? This is your quick stock analysis. Exxon is the world's largest publicly traded gas and oil company, which consists of 3 business segments, including Upstream, Downstream, and chemical. And just so we are on the same page, the upstream segment refers to points in the production early on in the process, which includes exploration, drilling, and extraction of oil and gas. Downstream refers to transportation, refilling, and marketing. And Exxon's chemical segment consists of petrochemical producing and technology licensing. As always, before investing in a company, it's important to understand the market in which they operate. When we look at this chart of countries with the largest oil reserves, we see that Venezuela has the largest oil reserves in the world. It may also surprise many people to see Canada ranked 3rd for global oil reserves, which is great for Exxon. As of 2019, the company owned about 70% of Imperial Oils, which has exploration and production operations across Canada, as one of the biggest oil refiners in the country and notably the largest chemical producer in Canada. Other notable companies under Exxon's umbrella include XTO Energy, which is an oil and gas drilling company in the United States. We also have Mobil Producing Nigeria Unlimited, which is one of the largest oil exploration and production companies in Nigeria, which itself is the biggest oil producing country in Africa. And I think it's important for me to take a moment to note this, as I hear it all the time, and it's prevalent to long-term investors who are interested in starting a position in a company such as Exxon. No, we are not running out of oil or petroleum, which I will refer to as hydrocarbons. Simply put, there is an ungodly amount of hydrocarbons or oil and gas left on this planet. And when people say that we are running out of oil, what they should say is we are running out of oil reserves with our current technology that is financially feasible at present prices. Which current statistics state we have about 53 years left of oil reserves. Just to put this into perspective, for decades, no one could have imagined the United States becoming a net exporter of petroleum. However, as technology evolved, to everyone's surprise, in November 2019, the United States became a net petroleum exporter for the first time since monthly records began in 1973. And of course, I'm not here to get into the environmental impact of this. As always, I'm your simple reporter, here to give you the cold hard quick stock fact. So, what I'm trying to say, as a long-term investor, I don't see supply being a primary concern for investors. However, what we believe is going to be an uphill battle for decades to come is maintaining a strong alliance between OPEC members and other large petroleum exporting countries, which of course is what allows these large companies to operate at a profitable margin. Which we already saw earlier this year what happens when 2 large players don't come to an agreement, with the oil conflict between Saudi Arabia and Russia. Another primary concern for long-term investors is technological advances. Just as technology has made petroleum exploration much more viable, technology could also lead to its downfall. Renewable hydrocarbon biofuels, which I'll spare you, but for the SparkNote analysis, are fuels produced from biomass sources through a variety of biological, thermal, chemical process, which creates a substance that is chemically identical to petroleum, gas, diesel, or jet fuel, which has the same quality standards as the petroleum fuels they replace. Which, don't get me wrong, our current technology is incapable of replacing hydrocarbons at scale, but as long-term investors, it's something interesting to think about. And of course, this isn't the only technology that's a threat to companies like Exxon. Madmen like Papa Elon have contributed to crazy advances that were unthinkable even a decade ago. battery advancements, making electric cars feasible, and really much more. But pump the brakes. Don't underestimate the power of hydrocarbons. There's a reason many economies around the world have been built around it, and don't expect it to disappear, at least in my lifetime. Potentially the juiciest part when investing in Exxon is the 7.4% annual dividend yield. I should note, as it's been rumored lately, I think a dividend cut is highly unlikely after more than 3 decades of annual increases. And obviously take it as a grain of salt. I'm your reporter, not a psychic. Here at Quick Stocks, we simply can't imagine Exxon cutting its dividends. That is all. The board of directors at Exxon understands the correlation between Exxon's share price and their dividend payments, and many of the board members have the most to lose if the company were to decide to cut its dividend. So with all of this in mind, what's our move? Well, with the insane dividend payment as a long-term investor and plenty of potential upside, especially as the world starts to get back to a state of normalcy, with this in mind, we actually decided to start a position in Exxon of $2,000, which we will potentially increase our position if the opportunity presents itself. However, I gotta note before some of y'all get too hyped, there's plenty of risk investing in a company like Exxon. If a second wave were to shut the world back down, or if oil price tensions rise once again, expect to see yet another dip in share price. And with a relatively expensive break-even barrel price, one could certainly argue it's one of the least resilient oil companies, and an investor should certainly expect poor earnings for at least the fiscal year 2020. As always, our initial position makes up less than 1% of our total portfolio, and in many ways this is a small hedge against our much larger Tesla position, which is worth $45,000. Take it for what it is. It's just I see quite a few catalysts for steady long-term growth in Exxon, such as its Guyana and Permian Basin project, and short-term pops when the economy fully opens back up. Anyways guys, that's all I've got for today. As always, the best investment you can make is to go long on Quick Stocks. Hit that subscribe button now at 468 subscribers and plan an early retirement. I'll catch you guys in the next one.